Aloha Makua. To go over what we discussed, or for those of you watching this video, is sort of an overview for those who had suffered in the wildfires and have an insurance claim, specifically a total loss. There's three main categories of insurance. One is your building, the second is your personal property or contents, and the third is your additional living expenses. the Regarding the building, I know there's a rush to settle building claims, and adjusters are trying to get checks out for building damages. I want for those of you to understand, if you have a mortgage, that check doesn't do much for you right now. The check for your building is going to have your mortgage company's name on it. Your mortgage company is going to want to make sure you have a builder and you're rebuilding, unless you're planning on paying off your mortgage. If you're planning on rebuilding, you don't even have permits yet. That check's going to sit for a very long time. So while you want to get your building claim settled at some point, in my opinion, it's not the biggest priority right now. The other two categories, your additional living expenses. There's some adjusters that I was listening to that were asking if a homeowner has family to stay with. No doubt you should do anything you can to make your family safe and put them in a good environment. But if you have insurance for additional living expenses, you have one of two options. You have a dollar amount, which they will give you up to that dollar amount for additional living expenses, or you have ALS, actual loss sustained. That is any amount up to, within reason, up to 12 months. So if you have insurance and you have additional living expenses that are actual loss sustained, and you're going to go to your sisters and your family is going to cram into one house, then you're saving the insurance company money, which is good for them, but not great for you. If you're entitled to a house, if you had a 4-bedroom or a 3-bedroom house, you're entitled to a 3-bedroom house. So you can have the insurance company put you in a 3-bedroom house. You can find one on island or off island. And then, you know what? Bring your family and friends that don't have insurance to stay with you for the year. So we're all helping each other. You're helping each other. This is a way to do it. But if you don't, in most cases, if you don't use that additional living expenses, you're not going to get it. So if you're talking to your insurance company, you can say to them, you're not sure where you're going to live yet, but you want to know if they're willing to just give you an allowance and pay that to you so that you get that money, or you have to actually incur it to get it. Some insurance companies will give you an allowance. Some may give you that money because they know you're going to spend it. So that's your additional living expense. So building, you can get a check, but you may not be getting that money because your mortgage company's name on it. It's going to sit. It's going to sit until you send it to the mortgage company. Then it's going to sit there until you're in the process of rebuilding. Your additional living expenses, you may not get it unless you spend it. And if you spend it, it's not going to you. Where the money is for you right now to help you, to help your family, to help you put your life back together, is in the personal property and the contents. Okay, that money goes to you. I'm doing a series of videos. I started the first video on contents, but I have a video on YouTube for you to watch and for you to start your contents process. That is the fastest way to get money that doesn't have anybody else's name on it. It's yours, and you just need to put things together to get to it, and we'll help you with some aids for that. So that's the quick overview of the three different coverages. And anything we can do to help with your recovery, let us know.